Good afternoon, ladies and gentlemen, and welcome to the MYCELX Technologies Corporation Interim Results for the 6 months ended 30th of June 21 investor presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged, can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Please just simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. We'll notify you by email when they are ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we would like to submit the following poll, and if you would give that your kind attention, we would be most grateful. And I'd now like to hand over to Kim Slayton, CFO, and Connie Mixon, CEO. Good afternoon to you both.
Good afternoon, and thank you everyone for joining us today. I'm Connie Mixon, CEO of MYCELX, and with me today is Kim Slayton, our Chief Financial Officer. I will go straight to the presentation and move straight through it. Kim will come into the presentation when we are presenting the financials. So we'll start off with our H1 2021 results. The company made very good progress in H1, making strides on our strategy for 2021, which was targeted for 3 objectives. The first was to expand our operating footprint in Saudi Arabia and the GCC, to include diversification in different industries and applications, delivering clean water in support of ESG goals and initiatives. The second objective was in the PFAS remediation market, that we could duplicate the success we have had in Australia to open up the US market for our PFAS solution. This market is estimated to be between $8 billion and $20 billion per annum, and we will get further into those numbers as well. The third objective was in the enhanced oil recovery market, which is designated as the EOR market, that we leverage our newly designed and patented equipment retrofit package with our regen media to displace underperforming incumbent technology in the EOR applications, which are generally in the Middle East. So with the background of our objectives, as we look at H1, we have shown signs of recovery coming off probably what was one of the most difficult years of company history. I'm going to pass on the financial performance part of the slide, which Kim will address later in the presentation, and move down to the bidding activity. There's no question we've seen a resurgence in bidding activity that support ESG initiatives in the Middle East. We were able to get 2 contract extensions valued at $2.4 million and to deliver an equipment sale to Nigeria for $700,000. The resurgence in the bidding activity also spills over into H2 because of the nature of the timelines of getting the bids set and equipment moved, et cetera. So this resurgence has played a big role in where we are right now with our numbers, as well as how well we did in H1. We are accelerating our presence in the PFAS market. In general, we actually started in H1 the design and fabrication of systems for the PFAS market so that we would be prepared once our trials are done and we are able to put rental equipment or lease equipment into the field. We also had further validation in Australia for a capacity upgrade of a PFAS system, not only at the Department of Defense, but post-period we had one at an oil company site as well. So the PFAS market continues to grow in Australia, which is also a very good sign. Post-period, in the US PFAS market, we did complete the fabrication of the systems that we had designed and are ready for field deployment. And we have also mobilized a trial system at a working remediation site, which happens to be a military site. This trial has been set back, unfortunately, because of the Hurricane Ida that swept through the Northeast last month. So we are about a month behind starting, but it should start in about 2 to 3 weeks, which we're very excited about because we need to collect further data in the U.S. because the U.S. Most of the U.S. market wants to see U.S. data, which is always the case. And it's not a non-starter because we've got data out of Australia. It just accelerates our opportunities. As I was speaking about the Middle East and H1 and the bidding activity, we were able to bring on a significant new contract, which was part of our objective one, which was to expand our footprint. And then we had two further contract extensions, and those were valued at $3.9 million. And then we had some other small wins of equipment sales or media and equipment for $650,000, including a paid regen trial. Regen, once again, is associated with enhanced oil recovery production. U.S. business development, we have, with the resurgent market in the U.S., we've recruited a senior VP of sales in our Houston office to help push not only our some of our oil and gas, but to work on our PFAS as well. As we look at our Middle East opportunities and our outlook, we have continued to expand our footprint, which we achieved with a new project, and once again with our 4 renewals. The key to this market is that they're in a extremely water-starved region, as we all know, and there are applications and diversification plays for us outside of petrochemicals and outside of oil and gas. We have leveraged and are leveraging compatible technology to ours that actually is dependent on ours, but gives us more range into other applications in the Middle East. And by doing that, we give ourselves a much better scope on other projects outside of petrochemicals, such as mining, such as, believe it or not, dairy, farming, et cetera, all of which need to be able to reuse their water. We're very excited about those opportunities. Furthermore, the enhanced oil recovery opportunities and trials, we do have the paid trial that is going to be commissioned by the end of this year at a national oil company in the GCC. And we have been technically approved and are undergoing final evaluation for our systems at a renowned polymer flood facility in the GCC. This is a large facility. It's 200,000 barrels a day. That's actually not the full facility. That's basically one of the sites that they're own, and that would equate in revenue if we were going for the full 200,000 barrels a day, roughly a recurring revenue per year of about $300,000 at that one site. So this regen opportunity is a large opportunity. It's a lot of media sale, which, as you know, is where our gross margins are the highest. So we are working very diligently to get these trials done and to make our first sale into the EOR application. The outlook for this region is good, not only because of the resurgence of activity, which has been very helpful, but because with their focus on ESG and they are committed to increasing production in some areas, it has led to the need for higher level water treatment. This gives them better performance. It gives them cost savings. It gives them cleaner water that they can reuse or safely discharge. So our view, and you couple this with not only our industry and our regional expertise, you couple this with the fact that we are bringing in complementary technologies to work with ours. It gives us a broader range and diversification into other industries as well, in an area where we do a lot of good in the clean water sector. Objective 2 that I was describing is the PFAS remediation market. For those that are not familiar with PFAS, I'll just go quickly through this little primer on it. What is PFAS? It is compounds that are highly toxic, and they come from man-made, it's a man-made organic compound that does not naturally degrade over time, which makes it very unique, and it's called the forever chemical. It just doesn't go away. It has been used in fast-moving consumer goods, Teflon, Scotch Guard, coated goods, takeaway containers, and clothing since the 1930s. So there's legacy contamination from these compounds that date back to the early 1900s or 1930s that are found, one, in landfilled PFAS-laden goods that I was describing, manufacturing sites where PFAS is used in their products, as well as firefighting training. There's a chemical they use that's called AFFF, and it is very, very toxic, and it is filled with PFAS. So therefore, a lot of the sites that we are seeing right now are military sites and airports, because they have used, for years, this foam that so easily leaches into groundwater and contaminates drinking water. So because of the nature of these compounds, meaning they're very difficult to remove, they're very soluble, they spread very easily in plumes throughout the soil and rainwater, even in the air. They are linked, unfortunately, to human health risks. They're endocrine disruptors linked to several cancers, liver damage, and thyroid disease, just to name a few. Interestingly, Australia is years ahead of the US in identifying and regulating this PFAS contamination. That's why we actually got started with this remediation effort in Australia, and came up with our chief science officer came up with a unique solution to this problem. And so therefore we've been operating in Australia at sites for 7 years, and now we're bringing this technology to the US. As we look at what is MYCELX's advantage in this marketplace? Well, I noted that we do have a unique solution that was put together and invented by our chief science officer using our core technology along with a complementary technology that is also proprietary to us. And what this technology is able to do is remove all the PFAS contaminants in a single pass, where our competitor systems suffer from, they cannot remove everything, all the contaminants at once. Therefore, they have to continue to recycle. That's a very big cost. And at the same time, no matter how many times that they actually recycle, sometimes they still can't get the contaminants out of the water, where we are able to do that. The second one is our footprint is small because we have very efficient systems. And the generation of less waste, the importance of this cannot be overstated. The waste from remediation of PFAS is very costly because it has to be thermally destroyed. There's already an issue of this in the US with having enough disposal places for this to even manage this large amount of waste disposal. Some facilities actually that are capable of this are already limiting acceptance of PFAS waste, except for sites that they're already existing and that they have received waste disposal matter before now. They're taking on no new waste. And we are at the beginning of the remediation of PFAS in the US, and this is already a problem. So our technology generates 50% less waste than the current technologies. So that is it's a huge cost savings, but it is also important in that we are being able to make sure that this waste gets disposed of properly. And we believe that that's going to be one of the largest selling points to push our technology forward. Not to mention, we have a competitive life cycle cost to treat. We not only have superior performance, but ours is very cost effective. So we can compete on a cost basis as well. The reality of this, more PFAS compounds and sites contaminated sites continue to be identified in the U.S. That is the reason why there is such a broad range of potential market size, because they have almost just started scratching the surface of identifying where it is. And even when they find it, they have no idea how much is in the soil or in the water. So this is an ongoing process for the EPA. In fact, the Congress is just now working through the PFAS Action Act of 2021, which designates PFAS as hazardous substances under the Environmental Response Compensation and Liability Act of 1980, and it includes enforcement guidelines. So this has come to the forefront in a relatively short amount of time. And since it's come to the forefront and has been identified and found in surrounding Air Force bases in particular, the EPA and the Congress are playing catch up. And so there's going to be a lot more of these regulations and a lot swifter enforcement once they get all of this passed through Congress and through the EPA. So that is, I think that's a very important point. This is still a new market. The second is, how do we address this market? Well, we are looking at it through teaming agreements with EPCs that are already have contracts that are already on site. That is how we're doing our trial right now on a working site. We are going through direct sales to other customers that we know, such as in the oil and gas industry. They too have the problem because they have firefighting training at their facilities as well. We are also nurturing our EPA relationship through webinars with them so that they know we exist and that they know that our solution generates the least amount of waste, among many other things, and is able to get all of the PFAS compounds. So that's how we are looking at addressing the market right now through multiple channels, but we think that these are the fastest way to do that. We view the outlook as very good for this market for us. And the reasons are the market's very large and the contracts are multi-year. Some of them are a year. We've gotten close to several EPCs, so we know how these contracts work in the U.S. and they're slightly different than the Australia, but they're multi-year. We had the better technology. We've had success that we can point to and show in Australia. We have trials commencing soon. We've got systems available for lease, and our cost to treat is very competitive. So we believe that the outlook for this market is very good for us. Currently, we feel the fastest and first dollar of revenue for us is the military sites, because those are the most active and they're already running, and there are operators there, such as the EPCs, who are looking for better technology. If they can operate, most of them have fixed contracts, and if they can operate and save money through waste disposal and better performance so that they don't have to continue to recycle water, it all goes to their bottom line. So they are all looking for better technology, and we believe that that's probably, in our opinion, one of the best ways to get into the market the fastest. Okay. That is the state of affairs for the PFAS market in the U.S., and I will turn over to Kim for the financial statements.
Thank you, Connie. All right, we'll start here with the P&L. Revenue for H1 was $4.2 million. This is a 17% increase over the same period last year. The increase was primarily due to an equipment sale in Nigeria in Q1, Connie discussed. Revenue from consumable media and service was fairly consistent with H1 2020, as was gross profit margin, which remained at 45%. Total operating expenses decreased 10% to $3.8 million in H1 compared to $4.2 million in the same period last year. That reduction is from the cost-saving measures that we implemented in 2020. Those reduced staff costs, travel expense, and other SG&A expenses. We did recognize a gain of $2.5 million on the sale of our building in Duluth, Georgia. As previously discussed, this was in our last presentation, this sale enabled the company to right-size office space needs across our main operating locations. With the gain from this sale, EBITDA for H1 was $1.2 million, and we had a net profit of $435,000. If we excluded the sale of the building, normalized EBITDA would have been negative $1.3 million, and we would have recognized a loss of about $2.1 million. This is still an improvement over H1 2020, which had EBITDA of negative $1.9 million and a loss of $2.8 million. Basic profit per share was 2 cents for the first half of 2021 compared to basic loss per share of 14 cents for the first half of 2020. Moving to the balance sheet, you will see that since December year-end, fixed assets have decreased $3.4 million. This was due to the building sale and then depreciation recorded in H1. Working capital increased $700,000. Cash increased $1.7 million to total cash balance 5.5 at the end of the period. And non-current liabilities decreased $1.6 million. That was when the note on the building was paid in earlier this year. The total impact was a $590,000 increase in net assets since December to $14.4 million. The cash flow statement shows that we used $1.4 million of cash in operations in the first half of the year. The proceeds from the sale of the building contributed to $5.4 million provided by investment activities, and financing activities included proceeds of $401,000 from a second forgivable loan that we received in January of this year, and then $2.2 million paid on the building loan and our line of credit. We ended the period with $5.5 million of cash and no debt on our balance sheet. Looking ahead, we expect that H2 will be similar to H1 and are currently forecasting total 2021 revenue to be about 20% more than 2020. We also do expect to burn some cash in the second half of the year, but should finish the year with at least $3 to $4 million of cash on the balance sheet. And our final slide here is an updated list of our significant shareholders. So with that, I will conclude the financial portion of the presentation and turn it back over to Connie for questions.
Very good. Thank you, Kim.
Mm-hmm.
Connie, Kim, maybe it's a good time for me just to jump in, just to give you a few moments to review the questions that have come in from investors. And thank you once again for updating investors. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the management team take a few moments to review those questions submitted already, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet Company dashboard, and we will send you an email when that's ready for your review. I'd also like to remind you that your feedback is important to the company, and immediately after the presentation's ended, we'll redirect you for the opportunity to provide feedback in order that the company can really better understand your views and expectations. Connie, Kim, obviously there's been a number of questions that have been submitted by investors during today's meeting, and I wondered if I could perhaps just hand back to you to read out the questions and give a response, even who it's from, where it's appropriate for you to do. Thank you.
Absolutely. Well, I'll start at the top. Richard M. The answer is I do not know. He's asking a question about a incorporated company needing certain. Is this documents, I assume? But no, I don't. I think we're going to have to refer to Jeremy on that. Next one. How long is the U.S. PFAS trial expected to take? We expect to run it 1 month and then move it to another site. So as soon as we start, we'll get all the data that we need, we'll decommission it, and then we'll move it to another site for another trial. Do you see most of your growth coming from your activities in the Middle East, or do you see other geographies contributing more? I see that the Middle East is still going to offer opportunities for us. that are just, we're such a great fit for what they're doing, and the kind of water treatment that they're going to need even more in the future. So I think the Middle East, where generally speaking, and Kim, help me here, I think that we're probably 75%. In the past, we've gotten down to actually as low as 60% Middle East.
For 2021, there because we've had some equipment sales into Nigeria, the portion of revenue from the Middle East will be probably more in the neighborhood of 60%, where it's usually more 70-80%.
Right. So I can see the Middle East going to 50. I can see very easily, especially with the PFAS market. With the PFAS market gaining ground. So I would think that we will definitely see the Middle East. I think it'll continue to reduce, but I can see that it could hang around 40 to 50%. But it's unknown how big this PFAS market is going to be. It's very lucrative, and we just don't know. And I have to say the same, for the enhanced oil recovery too. That is a very large market. And that is the Middle East. So we kind of have very good competing technologies in those regions of the world. And then, of course, we've also got our background, just Middle East and Nigeria, ongoing business from our footprint. So, that also adds to the Middle East side of the bucket as well. Okay, how protected is your technology from the patent perspective? Our technology is very, very well protected. We have a patent web that leverages off our core technology, which is a unique molecule that no one has, but we have. And we use that as the backbone. And from there, everything that we do, that technology is either included or it has some, the Chief Science Officer has based new patents on ways to leverage our technology into the new patents. So we are covered on the PFAS side, we're covered on the EOR side, and we're covered on just our basic technology that's in the petrochemical plants now. Excuse me, let me see this. Toggle down too fast. Okay. Do you make use of external pricing consultants in light of increasing inflation in many industries and the rise in oil prices to get better pricing for the company's offerings? We do not make use of external pricing consultants. What we've had, and I think the PFAS market is U.S. PFAS market is a good example of answering this question. You come into the PFAS market, we have an entirely unique solution. We made enormous inquiry until we established what the ongoing pricing was for the competition. So we have to be able to use what is in the marketplace now as a benchmark of what customers are willing to pay, even though it may not be as good. So we use actual real data and real pricing in the marketplace to decide where we can price. We know we are very competitive in PFAS, and we are very competitive in all other sectors of the oil and gas industry. We know for a fact how inflation, is going to affect this. There's a possibility that but for PFAS, I don't think so, because this is going to be something that's going to be beyond the control of industry. In other words, they're going to have to do it. So whatever it costs to do it, they're going to have to do it. It's the same for the military sites for the U.S. government. So I'm not sure that's, that there's going to be much control in that regard. And as far as the rise in oil prices, that cuts two ways. But I think that the one thing that will help us is that rise in oil prices always creates higher levels of production, more use of every product that they have to use in water treatment. So in that way, it honestly plays to our benefit. We have had some price increases of our that we're dealing with, like for example steel with our equipment, and some a little bit in our some of our raw materials, not dramatic yet. So we watch it, we understand what's going on, but we have flexibility. We do have a large margin. The largest margins are in our field, or in our media, our proprietary media, and we see that the proprietary media will be used. That we will have a very good pricing model in PFAS with the media. So we will have margin that we can play with if we have to. How long is the tender process for new contracts? What pushbacks do experience or competition do you face? In the tender process in the Middle East, in SABIC in particular, can be very fast actually, and we've got experience. We do face competition from time to time, but we've got a very good reputation, and we also are very reliable, and we don't fail. So, we are I guess you would call not high end in pricing, but a very high and reliable partner with the companies that we deal with. So we don't get pushback in that regard. Now, if you switch over to, we're a long-term established company, but we're going into the PFAS market. It's the first thing they come to us with. What's your experience? What have you done? Where is it? We want to see it in the U.S. Yes, we understand you've done it in Australia, but we want to know if you've done this in the U.S. So experience in the PFAS market is not something we have in the U.S. market, but we've got it in Australia. And frankly, PFAS, as far as being able to execute in the PFAS arena, it's very easy compared to oil and gas. And the competition we face in PFAS is in large companies, but they have inferior technology. So that will be our, that's going to be our, I think, our greatest asset. The tender process also in PFAS is probably going to be much longer. It's probably going to be for some of these. That's why they're probably at least 6 months to a year. That's why we're piggybacking on teaming agreements with established players that already have equipment in the field, because we really would like to just short circuit that tender process and just get pulled in because they're failing. Have you considered licensing your PFAS technology to bigger players? Yes. In fact, I mean, we look at different ways to leverage technology and to monetize, our technology to the best of our ability. And I believe, and this goes for not only for PFAS, but for every technology we have in the field. It's always better to show that yours is better than competition, that your cost to treat is what you say it is, and that your data is what you say it is. Then when bigger players are, want to either represent your technology or bring your technology in, it makes it much faster, and you also get a much better terms in a deal because it's already proven. So I would say that yes, we would always consider that, but I believe that it's better that we get it to a certain point, because we would want the pricing that we could get, unless somebody really really wants it and it makes it worth our while, then of course we would license it. What is the 3 to 5 ambition for the business? What investment or working capital, business development, et cetera, do you expect to be required to achieve this, and how do you expect to fund this? The 3 to 5 year ambition for the business is obviously revenues are significantly higher than they are now. The investment in working capital, I think that the investment in the PFAS area will be some equipment. There's opportunities actually to the point above that, for players that actually have certain, installations, and they can actually bolt on something like ours, and they're willing to rent it or lease it, then we can actually get equipment built, and we can have a lease contract. And most of the time, the lease contracts have a 12-month ROI, so on the equipment. So there's ways to do that without having to have enormous working capital. I do expect if PFAS takes off, that logically that we would be looking for that. And I think that there's several ways that the board is looking at this as well, because we certainly don't want to be not prepared when we need equipment or anything, manpower, et cetera. But we have plans in place, and we're very mindful of what this will take when we get to certain I would say milestones in the PFAS market. Middle East, we have a lot of equipment, and we have a lot of media in the Middle East already. So we may, have to add pieces of equipment to certain systems, but we've got we have a pretty good handle on that. So if anything, it'd be the PFAS market, I would say.
Connie, Kim, I think I might just interlude here on the basis that you seem to have answered every single question thrown by investors this afternoon. So thank you, firstly, to all the investors that have submitted questions. And of course, if any further questions do come in, we'll make those available to the company post this meeting. In the light that there's no further questions, Connie, do you think I could just hand back to you just for a few closing comments? I know investor feedback is important to you, and then I will redirect investors to provide you with their thoughts and expectations.
Great, thank you. First of all, I'd like to say thank you for your time. The fundamentals of our business have not changed. We do have a unique and patented technology that can deliver positive economic results as well as environmental improvement through a spectrum of industries. We're very excited about the resurgence of the bidding activity in the Middle East, because it is part of our core business, but we are equally excited and prepared to get underway with our plans for the PFAS market in the US, as well as the enhanced oil recovery market in the GCC. These opportunities, along with our professional and industry expertise, will play a big role in our success in the future, and we look forward to updating you when those events occur. Thank you very much.
Connie, Kim, thank you once again for updating investors this afternoon. Ladies and gentlemen, please could I ask you not to close this session, as we'll now automatically redirect you for the opportunity to provide your feedback in order that the company can really better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of MYCELX Technologies Corporation, we'd like to thank you for attending today's presentation. That now concludes today's session, so good afternoon or good morning to you, Connie and Kim, to you all.